Hey guys, Mike here. So yeah, stunning, crazy numbers just came out today about a certain sector, and so we're going to get into that. And the truth is, though, is anything stunning or shocking to us anymore? I mean, look what Snap did last night, right? Coming out like 2 months before they report earnings, I believe it is, saying we're not going to make it. You know, not going to hit the numbers probably. We're going to slow hiring. You know, and so and downgrading their guidance already. That might be the new norm, but that's exactly why I did this video yesterday right here, as you can see, saying watch out, this will move markets this week. And you saw with some earnings already reported, that's exactly what's happening. And so, you know, more bad news on the retail front, but you know, I'll link that video at the end for those who have not seen it to go watch it, because that's what this week is setting up to be already, as you can see, extremely volatile. But the numbers that came out this morning, you know, I guess we shouldn't be surprised. I did a video, I think it was last week, about this, kind of bracing us for it. And now I think everything's starting to play out, and so we'll see what happens. But again, I say take everything with a grain of salt, because it seems like all we're getting is bad numbers right now, right? And so here's the data that came out, and then we'll follow up afterwards.
Yeah, I had to look at this one twice, Rick, because I was like, wait a minute, that we were expecting 750,000, so to get 590 was really well below expectations. And I got to lay all of this on interest rates. I really do. We started the month with the average on the 30-year fixed at 4.88% in April, ended it at 5.41%. Remember, these are contracts signed in April. That's what these numbers are based on, not closing. So it's not back several months. This is the most recent indicator. So if you're looking at a $450,000 house, which is what the median price was, that mortgage payment just during the month went up $100. But from the start of the year, when a lot of these folks might have been thinking about buying a new house, that monthly payment has increased by $450. That's a lot for the average borrower out there to make that monthly payment that much higher. Also, looking at the month supply for the builders, a 9-month supply up from a 6-month supply in March, that's very high. A 5 to 6 month supply is generally considered a balance between buyer and seller. So 9 months means they're sitting on a lot of properties now. We have Toll Brothers reporting after the bell, and we're going to be looking very closely at cancellation rates on that, because we're starting to hear that we are seeing more cancellation rates in the market as people who, again, might have thought about buying in January put some money down on a new home. Remember, it takes 6 to 8 months to get to that home when you're building. Decided, you know what, can't afford this anymore.
And don't forget to hit that like, subscribe button, and share the video if you get anything out of this, guys. And what's crazy, and I actually did verify this way before these numbers actually came out, I just didn't know what I was verifying. Existing home sales fell in April to the lowest level since the start of the pandemic. This came out last week. Now here's what's crazy. This lets you know we live in two different worlds here. Sales of homes priced between 100K and 250K fell 29% year over year, while at the same time, homes priced at $500,000 to $750,000 rose 19%, and then homes priced at $1 million or greater increased by 16% year over year. And the crazy thing was, I went to like this get together at somebody's house, and this couple picked us up, and just so happened this guy I just met that day he's in the mortgage business, and he does regular home loans like for people like us. And he said the phones are dead, right? And this was at the beginning of May, I believe. We went to this house. His dad, though, does high end. He represents sports figures and really rich people. And he said that hasn't changed at all. And then I see this come out last week, and that just verifies, yes, that's what I'm talking about. This is what I keep saying. I've been saying for almost a year now about inflation. Once you reach a certain amount of income and above, you don't even notice inflation. Doesn't bother you, ain't gonna affect you. You're just gonna keep living your life. But it's the middle class and lower income getting crushed by this, okay? And you're starting to see it now. They're going, we can't afford the houses anymore because the house prices went up. The mortgage interest rates have just, just ballooned unbelievably. Can you imagine an extra $400 to $500 a month on your house payment every month if you were trying to buy the same house right now? That adds up fast, right? That's extra $6,000 a year, roughly, right? Just coming out of your pocket for the same house you live in now. If you had to rebuy it, that's brutal, right? And that's why I told you, put this on your TradeView chart, your Yahoo charts, whatever, and save XHB, the home builder ETF right here, because you can see major drop so far back in 08. That looks identical, right? Major drop. Look at the drop, what the percentage is. What is it, like 36% right there, about 119 days. And then, of course, you get the pop and then the drop. But you know, you come over here and if you look at the sell-off, it's almost identical right now, right? This is 34% roughly, so 2% less. Took about 173 days, and we still have had no move up yet. And I can't imagine there's going to be a move up anytime soon. All I can see is this thing dropping. But all I'm looking for is that pop up, see if it looks anything like 08, and then drop down and see if it drops down below the low it has already set. But here's the thing about bubbles, guys, and this is the thing I keep hearing so much about. How long have we been hearing about San Francisco, right, and how the bubble's going to pop out there in their homes and stuff. And look at this. I mean, if that ain't inflating a bubble, I don't know what it is. It's still been going since 2012. Los Angeles is another one. Look at this right here. Since 2012, same time frame. Look at it. Looks like Mount Everest, right? All of these are going to look the same, right? Go over here. Look at this. Miami. Been hearing this one forever. Look at that. Straight on up. And that 2022 right there, you see how you got the huge pop up? You know, look at Phoenix. I keep hearing a lot of you guys talk about how Phoenix is just unaffordable and all that stuff. And look at it. Straight up like a cliff, right? That's what's happening. I've heard the rents are crazy there too. And so, you know, look at those charts. Yeah, those are scary. I mean, if you didn't know those were houses and you thought and that was actually stocks, you would think that's pump and dump stocks, right? Like penny stocks or something. That's what that looks like to me. You know, it's getting pumped up and it's getting ready to get dumped, you know. But, you know, we'll see, because remember, this isn't 08. The banks we thought the banks were going under in 08. And so, you know, as far as we know now, everything I read about and hear about, the banks have more cash than they know what to do with, right? They're parking it at the Fed, trying to get some money off of it. I mean, yeah, there's trillions of dollars out there in liquidity. That's not the issue right now. And so do I expect home prices to cool off? I mean, eventually they have to, right? I mean, how can prices keep going up if demand is coming down? Which, remember, that's what the Fed wants. I said that weeks ago. The Fed wants demand to come down. And why is that happening? And they also said they wouldn't have to sell their mortgage-backed securities as much as they would the other things, because interest rates had gone up so far already, and the more they sell, the more it drives interest rates up even more, right? And so we already see the demand coming down, and they even said they wouldn't go to the max, and I'm sure they're not. So that kind of lets you know the real estate market itself is doing their job for the Fed, right? And so with home prices and the mortgage rates going up, I don't blame people for not buying in this market, but the problem is the rents. That's what you really got to start looking out for. The rents are increasing unbelievably in certain areas, right? It's pricing people out. They even got a term, I forgot what it's called. It's called like the gap people or something, where there's just this gap to where I saw a 60-minute special on this, to where, you know, like one lady, she worked for the government, right? She works for the government. She's got a job, benefits, right? But it's not enough to be able to actually afford to buy a house, but she's also, or even rent a house, but she also makes too much to be able to afford assistance. So there is this gap, right? Which sucks. You know, let me know how it is in your area in the comments. You guys done a good job of that. Share your stories. I always like for a good debate and discussion down in the comments. It tends to make things a lot more fun anyway. And these numbers do suck, but guess what? What numbers don't suck right now, right? And so, you know, here we go. Just want to put that out there. Get it out there early as I could. So anyway, have a good one. Hit the like, subscribe button if you got anything out of it, and I'll catch you later.